Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. All right, traders, here we go. Midweek, these markets are heating up. It is getting crazy out there. And we have 1, 2, 3 green omnis for tomorrow, baby. Not 1, not 2, but 3 of them. All pointing up. You gotta love it. Traders, this video is being filmed on Wednesday night for Thursday's trading of 4:30:09. Traders, I would like to tell you that these markets lately are, and I'm talking about the indice markets, lately are really starting to show signs of strength. I hope it stays with us. As you know, weeks ago I took off "Do not fall in love with the upside" off my board. I left just the words "with the upside." "Do not fall in love" has been removed. Back while we were having the big bear market, I was telling traders in every video, no matter what rallies, do not fall in love with the upside, right? A few weeks back, I removed that statement and said we are officially buying dips in the indices. Now, traders, since we have told you that, since we started doing those videos a few weeks back, I gotta say these indices have all been slowly moving along towards the upside. It's getting really interesting out there, and I have a bunch of charts I'd like to show you. It revolves around the S&P and the Euro, 2 of the 3 green omnis for tomorrow. I would like to show you why we have become buyers of dips a few weeks ago and why we will remain buying dips unless the market changes direction. Right now, the complexion is these markets want to move higher. Now, there's a reason for that. One of the main reasons is the Omni's proprietary moving average. Once we started getting above that average in indices, we knew likelihood is we would continue, traders. Why? Because when we started getting below the average, back when we were trading up near 1570, we told all of you it looks like the top is in and you got to start looking for downside because we're below the Omni averages. Now we're above the Omni averages and I am buying dips. With that in mind, traders, let's go to the charts. Okay, traders, the first chart I'm going to show you this evening is the Nasdaq June daily bar. The Nasdaq was one of the first, if not the first, indice to get above the Omni average. Since it's been above that average, it has been running away. Traders, do you know what this green average is right here? It is the 200-day moving average. What usually is called the trigger for fund managers to either buy or sell. You get above a 200 bar or 200-day moving average, most funds will begin buying if you get above it. They begin selling if you drop through it. If we get above that, traders, we got some market here. We started doing videos about becoming buyers of dips ever since Nasdaq got above here. Traders, look at how it's gone up since. Now it's about to challenge or get above the 200 bar moving average. I kid you not, traders, you get above that, you got a real market here. Let's see what's going to happen. So that was Nasdaq. We consider Nasdaq one of the leaders, if not the leader of the S&P. First one to get above the Omni average. Let's look at a few more charts here. Okay, traders, the next chart here on the menu is the Mini Russell, or now newly named the ETF. The Mini Russell, second one to get above the Omni proprietary moving average, has gotten itself smartly above, is rallying sharply, and is as well heading towards the 200 bar moving average. Traders, I will keep repeating this, that 200 bar moving average is absolutely a trigger to many traders on this planet, especially fund managers. I think we're going to get up there. That comes in at around 526 in the ETF or the Mini Russell, which is currently trading somewhere near 500 right now. It's actually around 490 and change. Keep an eye on that one, traders. Let's look at a few more. Okay, traders, the next market that got above the Omni average and maintained levels above it was the S&P. This is the S&P June daily bar chart. Omni proprietary average here. Market gets above it, comes down, tests it, and starts to run. Once again, target here, 200 bar moving average. Traders, before we get that overzealous, you have the head of this head and shoulders sitting over here. Shoulder, head, shoulder. If you cannot get above that, the move is done. If we fail up here, the move is over. But for now, I am optimistic. I trade what I see, not what I think might happen. What the charts tell us, what I see on the charts is you are in a very nicely defined channel, moving higher, well above the Omni average, and now heading towards the 200 bar moving average. Traders, it's becoming a theme here. On the way down, I did these very same videos, and I said we're now below the Omni average and we're heading towards the 200 bar on the downside. Once we got below that, all hell broke loose. Now we're above the Omni average and starting to work its way towards the 200 bar moving average. You see the Nasdaq is already there, and that's the leader. Let's see what we're going to get. Traders, there's a couple more charts here to show you. All right, traders, now we're looking at the Dow Jones Industrial Average daily bar, again above the Omni average. And interestingly enough, look at this trend line right here. We took out this major trend line resistance today. Now for tomorrow, Thursday, we're going to open above it and likely again head towards the 200 bar moving average. Traders, in the Dow Jones Industrial Average, that comes in at 91.15. We're trading around the 80s right now, 81 and change. We're not even up there yet, I don't think. We are looking at possibility of a decent rally here. I'd say keep your eye on this. We're about 81, 85 right now. We could easily see the 91 level and test the 200 bar mover. Again, the Dow Jones above the Omni average in a very nice looking pattern moving higher. And the next target zone will be the 200 bar moving average. What's interesting about that is the head and shoulders back here comes in just under the 200 bar moving average. So getting up to the middle of the head or the top of the head of this head and shoulders in the Dow would bring you up here towards the 200 bar moving average, traders. These markets are beginning to exhibit bullish behavior. I hope it continues. Let's look at another chart here. Okay, traders, another chart that usually can be looked at as a leading indicator is the Footsie, the Financial Times Stock Exchange Index over in London. Traders, last time we tried to get above the Omni average, it failed. Then it tried to get above the Omni average again, and it failed. Put in this V bottom, and what happened this time? Above the average, messed with it a while, and started to run away. It is now decisively above the average. Next target, obviously, the 200 bar mover, up in the 44 area. That's what we are looking for, the possibility now of the Footsie to run up and touch the 200 bar moving average, traders. You see what's going on here? There's a theme. Get above the Omni proprietary, it gives you a nice run or a nice base, and then starts heading for the 200 bar. There's another market I want you to look at, which is just like the Footsie. It's an index in Europe. Let's go look at that. Okay, traders, the next chart you're looking at is the DAX June daily bar. This is the German stock indice. Traders above the Omni average, and look at the channel it has been respecting all the way up. Look at how nicely defined the channel is. Top, bottom, top, bottom, top, almost bottom, top, almost bottom. Back to the top we are likely to go. Traders, I think that the DAX looks very, very solid here. I would certainly continue buying dips in that world indice. Now, traders, I want to show you the Euro currency chart because that is one of our bullish omnis for tomorrow, and let me show you that one. Okay, traders, this is the Euro currency. What you are looking at inside this red box is called a bullish flag. Here's the flagpole represented by two major down days that we had, or I should say up days from here. Put in the flagpole. Here's the flag. It got above the Omni average, got to the top of the flag, and we are sitting right here, right now, trading around 133. Traders, we are buying euros here. We're buying them just under 133. You should do your homework, take a look at your charts and see if you agree. We expect this euro to take off a little bit here now that we've broken above our bull flag. That's a pretty big bull flag we're breaking out of towards the upside. What does it mean? If euro breaks out towards the upside, it pushes US dollars down. If US dollars go down, stocks go up. Dollars going lower means stocks are worth more. You need more dollars to buy those stocks with. It inherently pushes the price of the stock market higher. That's if dollar index is going lower, and dollar index works opposite the euro. So if euro has an up arrow, dollar index has a down arrow. Traders, do your homework. Pull this flag off your chart if you can find it. Make sure you define it properly and then see if you'd like to trade it. I think it's a pretty smart looking trade here to buy the euro this evening on Wednesday for Thursday's trading. Do your homework, traders. I'll be right back to you. Well, baby, so you seen those charts, Omniacs? How do you not get excited about that? That bull flag in the euro looks like a buy if I've ever seen one. That means the dollar gets hammered. That means our stock market can go higher again. And how about this? Bravo so far for the indices around this planet. The indices are starting to work their way higher. Now, traders, I am not telling you to run out and buy every stock you can find. I am trading the indices because they're easy to trade. They're more predictable. And if they turn on a dime, and we'll turn with them and go right back down. We will sell rallies if necessary. But officially, for the last few weeks, we are buyers of dips in the stock indices around this world, especially the U.S. stock indices, the S&P, and it has been working, traders. Pull your charts, take a look at it. Since we've gotten above the Omni average, we have been sailing towards the upside. Remember, I said this earlier, once we got below the Omni average, when we were at 1576 and started to come off a little, we started to notice this was turning into a bear, and what a bear it turned into. Now, we're above the Omni average, and if this continues, I will start calling bull market. I have not called it yet. Please don't misread me. I am still a bear in a market that has a little bit of a bull leg, but the longer that bull leg extends itself, the more bullish we all need to become. So stay nimble, keep your eyes open, trade what you see and not what you hope for, and do your homework. With that in mind, traders, when I talk about homework, we are at the Omni Trading Academy. It's www.livewithoscar.com, and teaching you how to do proper homework, which is analysis on markets, is what we are all about. Traders, many of you, thousands of you have, and thank you so much, by the way, thousands of you have come to my site for my assistance, and I think many of you think that all you should be there for is for the recs that we put out, where we're going to buy and sell. I am here to tell you right now, traders, you should be coming to my trading academy to learn the mentality behind being a trader. What sort of mentality do you need to implement trades, to stay in the market long enough to know when to get out, to know to always have your stops in? There are thousands of different tidbits that we can teach you, but what I'm trying to say is you should come to my trading academy to learn mentality behind being a successful trader, to learn proper analysis, how to read the charts, and then at least third on the list, you should be looking at our recs simply as a perk. You should look at it like this. This guy's been doing this for 27 years. He's got lots of experience. He's willing to let us look over his shoulder. I want to learn about his trading style and mentality. I want to learn how he does analysis. Then I'll take the recs as a perk on top of it all. That's what I want you to use our Omni Trading Academy for. Yes, the recs have been successful, but if you don't learn how to do them yourself, they're simply recommendations that if I cut them off, you can't trade any further. So again, I will repeat, You come to my trading academy to learn how to be a better trader and a better analyst. Worry about the recommendations last on your list. All right, traders, if you'd like to meet me in person, you come on down to the Mandalay Bay in Vegas. That is May 11th through the 14th next month. We will be there. We have a booth. We're set up and ready to rock and roll. We have a speaking arrangement on the main stage on Thursday. We'd love to meet you, Omniacs. If you'd like to come out and join us, please do. Book your tickets and come on down to Vegas. You need any information about the trade show, you call us at 702-629-4755 or look at the site or respond to
rsvpmoneyshow@gmail.com.
That was rsvpmoneyshow@gmail.com. That's a little email address we set up for you. If you're going to come down to the trade show, send us an email there so we can prepare for you. All right, traders, I want to get out there and mess with these markets. It's Wednesday night going into Thursday. I heard an alert. I think I'm already long the euro. We'll see what happens. I hope you're following these recommendations. Traders, don't forget, say this to yourselves every morning, every afternoon, every evening. It'll help you keep your emotions out of trading. And you know what that is? Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.